Right, welcome back. Our discussion is about accountable institutions who are subject to the Financial Intelligence Center Act. How do we determine who needs to comply with the provisions of FICA? Germa, over to you.
Thank you,
Talk
Anton.
to us about accountable institutions.
So now that we have a proper understanding of the Financial Intelligence Center and the Act, we need to know who it applies to. So the Act makes this very easy. There's a schedule in the Act, Schedule 1, that lists all the accountable institutions who the Act applies to. So to make it easy, we'll start with naming a few of them. We've got financial services providers that we've been dealing with intensely already. But then, for example, a casino has been added recently. A person who deals in high value goods has been added recently. And interesting also, credit providers, as defined by the National Credit Act. So interesting, these accountable institutions have a list of responsibilities on them. So first of all, they need to register with the Financial Intelligence Center, obtain a registration number from them. They need to appoint a money laundering compliance officer. And I want to stop there for a minute. The money laundering compliance officer is a very important part of the accountable institution's business. So you can't just appoint someone in the business randomly to take over this role. It's clear in the Act that it has to be a senior person with sufficient responsibility and seniority to take on this role, to head up the compliance with the FICA. So each accountable institution, as been listed in Schedule 1, needs to adhere to the requirements as listed in the rest of the Act.
Yeah, and I think what's important is that there has been changes very recently in Schedule 1, which came latter part of 2022, which changed that list of accountable institutions. We used to have accountable institutions, and we also used to have reporting institutions. We now no longer have reporting institutions. There is simply a list of accountable institutions, which then means that every aspect of the entire Act is applicable to you as an accountable institution. The likes of those who create companies, so register companies with the CIPC in South Africa, you are now in the fold of being an accountable institution. Crypto asset providers are now in the fold of being accountable institutions. And then Kama mentioned the high value goods, which means that anybody dealing in cash and kind for transactions that are 100,000 Rand and above, which really, I mean, you could be a jeweler, you could be a motor dealer. So your luxury goods, if you're dealing in goods and services of 100,000 Rand and above, you are now also in the fold. Estate agents have always been included. Your attorneys, because of course they take trust funds into account, are all on the list of accountable institutions. And I think it's important that the revised list is understood, because you may have fallen out of FIC previously, but are now included within the ambits of Schedule 1.
And then also to add to the list of accountable institutions, so the people who have not registered before have now been encouraged to register, but obviously all the new inclusions of accountable institutions have to register, but they also need to submit a report before the 31st of July 2023 of their understanding of the Act. So that has to be submitted for each of the new additions to the list of accountable institutions.
So the understanding of the Act would then obviously include attendance and certification on a course such as the one that we're busy building as we speak. Okay, that's nice to know.
And I think they've got some time to implement the full risk management and compliance program. If you're a first-time accountable institution. And importantly, if you were a reporting institution previously, you've automatically been converted into an accountable institution. So the likes of motor dealers may have only been a reporting institution, but are now accountable. You retain your registration, and you now just need to apply.
Yeah, there's one caveat that I want to raise on what you've just said. The registration of a new accountable institution had to have taken place already. If you are listening to this course, to this conversation, and you are one of the new accountable institutions and you have not yet registered, you're going to have a bit of explaining to do. it is the implementation of the rest of the requirements for which you have been given some leeway until, I think, January next year, if 18 months, I think. Or 80, it was 18 months starting December 2022. So please don't confuse the fact that you may not get fined for failing to have a perfectly adequate risk management and compliance document between now and then, but you would still have some explaining to do if you haven't registered. So the best I would suggest is go to the FIX website and register there. They use a piece of software that you can pick up on their website that is called GoAML, so GOAML, and that is the software on which you register for the FIC.
And I think, Anton, many in the FSP space, many get confused because you get a 5-digit number as an FSP and you think I'm all happy and I'm registered. The FIC also issues a 5-digit, what they call an organization ID, and that is distinctly different to being registered with the FSCA. And many newly licensed FSPs get confused and don't understand that I've now got a license from the FSCA, I'm all sorted. I actually am also obligated to register with the FIC, which is a separate registration, as Chris mentioned, on GoAML. Of course, if you're only doing something like medical aid, you're not required to register with the FIC. Or if you're only doing non-life sort of short-term insurance, then you're not required to register if you're an FSP. But all other FSPs do need to register.
Nerishi, may I just, because you're a chartered accountant, let me just ask you from your perspective, the inclusion of what I generally would refer to as accountants, okay, which perhaps is a misnomer, but it seems to create a little bit of confusion. People are not 100% sure of what kind of functions it is that they have to perform in respect of companies or trusts, which will require them to also register as accountable institutions. In your view, do you think it is only those things that are prescribed in law, and anything that you do voluntary that your client can't demand of you, that would be excluded, but the things in law?
Yeah, so this would definitely be my opinion here, but for me, it's the creation and the registration of a company. If you as an accountant are, usually that is an added service as an accountant or a separate service as an accountant. And again, one has to distinguish between accountants and registered auditors because there's a big difference there. So for me, if you're creating, registering a company, an external company, a foreign-based company here, or a normal PTY, trust, CC, well, now you can't register CCs, but if you're doing any of the activities that relate to the legalities of that entity, for me, you're an accountable institution. There is a view out there that all accountants need to be registered. Personally, I don't see the logic. You're not involved in you may assist in doing an activity of bookkeeping for an entity, but the decision is theirs and they just outsource that aspect to you. And hence, a bookkeeper, in my view, is not an accountable institution. If the Companies Act requires an audit, for me, it's the auditor that's registered, and not the entity.
Okay, good.
To summarize, when I look at the list of accountable institutions, when I look at the institutions that must be registered, it appears that those institutions are actually witnesses of money flowing from one to the other. An estate agent, for example, who witnesses a sale of property, and sometimes that can be a cash transaction. People may be tempted to settle the purchase price in cash, drug lords, etc., come to mind. And therefore, logic dictates that an estate agent, if they become aware of a transaction that may include cash, etc., for that reason, they would be an accountable institution. The logical institutions like banks, they facilitate the transfer of money, a mutual bank. So any of the listed accountable institutions in terms of Schedule 1 when I look at them, I see someone who is a witness of money flowing from one entity to another, and that actually brings them into the fold. Would that be a too simplistic way of looking at accountable institutions?
No, Anton, I don't think so, but I'm going to mix metaphors horribly here. Okay, so you can see how, with the inclusion of new accountable institutions, the net is cast much wider. Okay, and at the same time, the noose is tightening. So I apologize. I apologize for the mixing. So in the past, we had attorneys, estate agents, banks, and so on. Substantial part of the economy, but still in terms of numbers, quite small. Now, with the inclusion of credit providers and in particular high-value goods providers, even if you sold an inventory item from your store, which is 100,000 Rand or more once a year, you have to register. That brings almost every second business in South Africa into the fold. So it is a lot wider. Because, and the reason that they've done that, just to pick up on your summary about the flow of money, is because as the net tightens in respect of banks and the previously regulated accountable institutions, the criminals find new ways, and they find new businesses and new techniques through which to launder the money. And that is why every time this is what's going to happen. We may end up in a situation, and I confess I say this a bit tongue-in-cheek, although I am fearful, we may end up with a situation like in East Berlin before the fall of the wall, where it was reckoned that 2 out of every 3 people in East Berlin spied on their neighbors on behalf of the government. We could get to that point.
A last question that I find interesting is the move from reportable institutions and pulling them into a fully fledged accountable institution. So for some of you who may find this as interesting as I do, just explain that move, because obviously it seems like an accountable institution has got more responsibilities than a reportable institution. Is that part of the grey listing, or what was the rationale of doing away with a reportable institution and pulling them into the fold?
Yeah, I mean, I'd say like reportable institutions included the likes of a motor dealer as an example, which at the end of the day is an easier way to launder money. It's a high value luxury purchase. It makes more sense for them to be an accountable institution and have to deal with the full responsibilities, because if you were only reporting, you basically had to do your cash threshold reporting and your suspicious transaction reporting. And it didn't require you to implement this whole risk-based approach. At the end of the day, now the net is wider at high-value goods at over 100,000 Rand, which then could mean not just a motor car, it could be any item. And it then places the responsibility on the accountable institution to do your risk rating. Yes, I mean, to an extent, perhaps it was a little bit of a knee-jerk to the grey listing, but I think in hindsight it makes sense, because luxury goods are an easy way to launder.
You agree with that, Germa?
Absolutely. So Kruger Rands were ring-fenced. Now it is high net worth luxury goods. So it broadens the net.
Yeah, and it does make sense.
It does make sense.
Yeah, and it kind of didn't make sense previously as to what, well, if I can launder money in an item of jewelry and I can launder money in a motor vehicle, why were they treated differently? So